Hey everybody, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please leave a 5-star rating and review. Folks, there's nothing new to report on the price. We're still waiting for Bitcoin to make that move, whether that be a relief rally move or a continuation of the bull market to new all-time highs. So at this point, it's a waiting game. If there are major changes, I will, of course, let you guys know. But let's jump into some crypto news. Today, we had a bunch of XRP spot ETFs go live. So Grayscale's XRP Trust ETF went live. So that's a big one. And also Franklin Templeton launched their XRP spot ETF. So a lot of XRP spot ETFs going live here, guys. And Grayscale also launched their Dogecoin ETF. So this is really great. It's going to build a lot of awareness about these assets. It's going to be another on-ramp for people to participate in the crypto market and, more of the supply to be bought up. Now, obviously, we are in a major correction, so we have to get out of here before you start to see these ETFs perform really well. And here, Eric Balchunas of Bloomberg says there are 5 spot crypto ETFs launching over the next 6 days. Beyond that, we don't have exact details, but we expect a steady supply of them, likely over 100 in the next 6 months. And he shared a chart here that his colleague James Seifert, who I've had on the podcast, put together, just showing Bitwise's Dogecoin ETF, Grayscale's Chainlink ETF as well. So a lot more is down the pipeline, and you're going to see a lot of altcoin ETFs here. Expect to see AVAX, Cardano, more HBAR ETFs, and so on and so forth. Once again, I know the timing is not great with everything that's happening in the market, but still, these on-ramps being set up are very good for the long term. And, if we do see some sort of relief rally for Bitcoin and altcoins start going bananas, you could see the inflows tick up. Now, if the bull market continues, based on, let's say, my thesis of the macro factors, and we go to new all-time highs, you're going to see a lot of inflows into these respective ETFs. Now, we have some interesting news around Vechain. So Vechain announced today that they have partnered with Rekord to deliver digital product passports and RWA infrastructure for the EU market. So Vechain has entered a strategic partnership with Rekord to accelerate the next phase of the tokenization infrastructure for real-world assets. This partnership brings together Vechain's battle-tested, energy-efficient blockchain with Rekord's API first trust layer, which makes data streams tamper-proof with minimal integration effort. Enterprises will be able to secure logs, documents, and product events on-chain without changing user experience or rebuilding core systems. So this is really great adoption for Vechain. I am a VET token holder. Many of you know that. And I am bullish on this project too. They continue to get adoption across the globe from different brands and companies. And this is a pretty big one. We are seeing the tokenization trend grow significantly. Everyone is joining the tokenization race. Now, folks, a great place where you can buy, sell, and stake your crypto assets is on Uphold. So if you want to buy Vechain or XRP or Doge or Bitcoin itself, you can do that on Uphold. And they have 300 plus cryptocurrencies. They offer staking on 20 plus crypto assets. Now, I've been a user of Vechain since 2018. They're one of my go-to exchanges. I've never had any issues or problems, and they've always been reliable. And best of all, they don't commingle or lend out your crypto assets, and they are 100% reserved. You can review their transparency report on their website. Now, they also offer a great rewards program where you can earn up to 5.25% on stablecoins. And part of the rewards program, you get 24-hour early access to new tokens that they list. Now, the stablecoins they support for this program is USDC, that's issued by Circle, you get 2% there. RLUSD, which is issued by Ripple, you get 5% there. And USBC, you get 5.25% there. So great program. And in order to participate, you simply have to open the app once per month, deposit $50 once per month, and trade $50 once per month. And folks, they're doing it the right way. I vetted this. I interviewed the CEO and many folks, and they're not doing anything weird or shady like, firms have in the past. They are a regulated exchange, and they're doing it the right way. So if you'd like to learn more about Uphold, check out the link in the description. Now, folks, it seems Operation Choke Point 2.0 is not over, and JP Morgan is continuing it. So, JP Morgan has ended banking ties with Strike CEO Jack Mallers. So, Senator Cynthia Lummis even tweeted out about this, and she said, policies like JP Morgan's undermines confidence in traditional banks and send the digital assets industry overseas. It's past time we put Operation Choke Point 2.0 to rest to make America the digital asset capital of the world. So Jack Mallers, highlighted that they closed his account and he's been banking with them for a long time, but he has made some very scandalous comments, about Jamie Dimon and JP Morgan talking about, the work they did with Jeffrey Epstein and all that, right? And he's not wrong, but he's been very public, and it seems like there's some retaliation here because when he asked them, why have you debanked me? And they were like, we're not allowed to tell you. So that's weird, right? If you did something and they're like, hey, you did X or Y, and this is why we're shutting your account. Okay. You give a valid reason. They're just not saying anything. So this is clearly some form of retaliation. And it sucks that these banks can do this. They could just shut your account down. Don't give you a reason. Like, what? But the crypto industry is going to fight back. We've been winning these battles and we've won the war, honestly. We are in the then you win phase, right? So these folks are going to be in for it as crypto, even crypto is preparing for the midterms coming up in the election. So Stand With Crypto is going to vet 2026 candidates on digital asset positions. So crypto is ready to spend money again. And anyone who's anti-crypto, they're going to get their asses handed to them again because crypto was the biggest spender in the 2024 US elections. And we saw how that panned out. So Jamie Dimon and JP Morgan, they are going to be in trouble. Now, they do have a lot of power, so we'll see what happens. But I think if the public pressure builds up, plus the pressure from members of Congress, they're going to have to capitulate or at least give an answer why they debanked him. And let's see if they start to debank other people, even though they have been embracing crypto. They're kind of forced to. I don't think they want to. I think Jamie Dimon is doing it, kicking and screaming. He does not like it at all. But like I said, we're in the then you win phase. But let's watch this closely. Are these banks, trying to stop some of these players so they can push their products and services, right, that they're building out? Let's see how this works out. Now, moving ahead, Ondo Finance turns to Figure's stablecoin with $25 million investment to back tokenized fund. So I am an Ondo token holder. I'm bullish on this project. I recently interviewed the founder, Nathan Allman, at Chainlink SmartCon. Many of you have seen that interview I published a few days ago. So Ondo Finance has purchased 25 million of YLDS, the yield-bearing stablecoin issued by Figure Technology Solutions, to diversify the assets backing its tokenized U.S. Treasury funds. The company said Monday that YLDS will be added to a reserves portfolio that already includes tokenized treasury products from major asset managers, including funds issued by BlackRock, Fidelity, Franklin Templeton, and WisdomTree. Designed for institutional investors, the Ondo short-term U.S. government bond fund offers on-chain exposure to treasuries with 24/7 redemptions and an estimated annual return of 3.68%. The tokenized fund has about $777 million in total value locked as of this writing. So, guys, we continue to see expanding and building, which is very healthy. And you can see tokenization is the big race here, in addition to stable coins. And these folks are backing their tokenized funds or with different assets. So they're backing with Figure stablecoin, which is interesting. Now, crypto is a global asset class, and we got news out of Japan. Japanese watchdog to require exchanges to hold liability reserves. So across the globe, we're seeing the infrastructure being built for the crypto asset class. Regulations and rules are being put into place. There's no banning anymore. The people who are anti-crypto have capitulated. They've all disappeared. You got the UN educating people about crypto. You have the IMF and the BIS showing people which way to go, which rules to put into place. they've completely capitulated. It's amazing. So the financial services agency in Japan will reportedly require cryptocurrency exchanges to maintain liability reserves as part of measures to guard against hacks or unforeseen events. According to a Monday Nikkei report, Japan's FSA will revise its requirements for local companies to include methods for quickly compensating users affected by security breaches or other causes. The financial watchdog cited recent hacks of global exchanges as part of the reason behind the change. So I think this is great. These exchanges need to have the liability reserves. Something happens, right? Unforeseen events, like the article says, that they can make their users whole. Right? We've seen this time and time again. This is why I encourage you guys to do self custody. Trezor is one of my sponsors. I use the devices. The links will be in the description to hold the majority of your crypto assets there because you control the private keys. You can put it in a safe, in a safety deposit box or whatever, right? But there's a risk when you put stuff on exchanges and you leave it there because even if the exchange is really great, they're not trying to scam people, they could be attacked. And now, if they have insurance and they have the liability reserves to make you whole, then I think that's good. Maybe you can leave a little bit of crypto on there, but if you're leaving all your crypto on there long term, make sure they have the reserves and the insurance. But I would highly recommend you go self custody. So this is good. We need this globally. Have the reserves to make people whole, have the insurance, and so forth. So the Financial System Council, an advisory body to the FSA, is set to release a report on the matter following a meeting on Wednesday. One of the expected recommendations would require crypto firms to create liability reserve funds. So this is great, guys. This is what we want to see. And just look at what's happening, the building out, right? A lot of the white glove service, a lot of the insurance, assurance, and infrastructure that exists in TradFi is now being built for crypto. So that is a very good sign. And look, some of the TradFi folks are building it, right? Because they want to offer these services. They know what their clients want, and they have the pedigree. They've gone through the process with stocks and other assets. But with crypto, it's new. They got to do things a little bit different, but still, you got to have that infrastructure. So all great news here, folks. Folks, that's the news. Let me know what you think. Leave your thoughts and comments below. I know we're going to head into Thanksgiving with not any type of major price action, which is very different. It's a big departure from what we've seen historically. But look, this is the nature of markets, right? And I often state no one has a crystal ball, and we need to adapt to the market changes. Obviously, we don't want to invest with hopes and dreams and feelings, but rather look at the data. And we're just seeing a shift in the timeline, with the headwinds we've had this market. And I think a big milestone will be the Fed ending QT, and that is happening December 1st. So pretty much next week. So I think, I'm waiting to see what happens post Fed ending QT. And then you got the market structure bill. Liquidity is going to start flowing again. We're seeing different governments around the world, like Japan, start to do quantitative easing. The Fed, I think, is going to cut rates again. So we're heading to a very loose monetary environment with low rates, quantitative tightening stopped, and the Fed, I think, will roll into quantitative easing at some point. But they have different mechanisms and ways to inject liquidity, like we've seen the Treasury, the TGA, and much more. So patience. Patience is a key here, folks. I know it's painful. I know it's rough. I'm with you. But we got to be able to push through these things because it's the nature of markets, right? You can't have the pumps without these type of volatility moments. Now, a great way you can support me in the podcast is by subscribing to my free email newsletter. It is 100% free. Link will be in the description. Check out my book on Amazon. It's available in paperback and digital, and my course at mycryptocourse.com. This course teaches you everything you need to know about crypto. So if you'd like to learn more, check out the link in the description, and I'll talk to you all later.